What's good, Joe? A little forced update. Let's give some people some time to get back in here. Welcome back. Welcome back. I don't even want to think about how long she was refreshing for. Just white knuckling that refresh. All right, what time is it? All right, we'll give it till 6 o'clock so the room can get filled back up, and then we'll start the deep dive. We got 10 minutes. You have to hit that like button on the way in, yo. Our ratio is looking sick right now. All right. So just to catch up, while we're pausing our clarity bill, Japan has passed theirs, Russia has passed theirs. This whole being first thing is kind of losing its oomph when you're no longer first. You got Trump sitting on about $905,000 worth of Bitcoin, almost at a billion. Nah, it's just an audit I did of the current stablecoin rails. It's just sort of a catching up on the health of them before we get this influx. Won't be long with the Russian and the stablecoin thing together. Maybe like 30, 40 minutes. Yep. Circles, in my opinion, what ties them all. There's still plenty of blockchains for Circle to come onto. It's growth for me, right? Between Tether, well, aside from the fact that you can't really invest in Tether, you can invest in the rails, but you can't invest in Tether itself. Um, but Circle has a lot more room to grow. And at a time where Tether's getting kicked out of complete countries, continents almost, that leaves a bit of a vacuum, right, for Circle to fill. I've said it for a long time. I think Circle is the US digital dollar pilot program. Just nobody's admitting it yet. Some of the connections between Circle and Coinbase and the SEC, very interesting. Like, how can you have a CBDC without calling it a CBDC? But we'll get into that, right? We'll get into some of the censorship issues and all of that good stuff. We got to tackle Russia first, though. We'll give it another 5 minutes. I'm not gonna lie, Japan is looking more and more inviting. I mean, for me too, but what I mean is for crypto projects. Yeah, exactly, Austin. Same amount of control. Jasmine's moving. Oh, I'm with you though. You imagine if that gap fills? The universe loves me, but I don't know if it loves me that much. Jasmine's at $195 million market cap. Sheesh. Yeah, you need like the oldest charts you can find, really. Daily. honestly, like without the love for it aside and everything, I think the true value of Jasmine should be somewhere around $1 billion market cap. And I think if you look at where the most amount of traders had agreed that it's a fair value, right? So the lower it goes, the better. The more multiples you can give me off of that billion, I'll take it. This is what it looks like. Yeah, they're doing a lot to capture. They're doing a lot to recapture some of the value in the chain. Jasmine's got these data lockers that look very promising. It's IoT, right? Internet of Things. Internet of Things was sort of AI agents before AI agents, if that makes any sense. In that deep dive that I did about the machine economy, people have been trying to come up with blockchain for a very long time, since the 70s. And there's reports of the necessity for a permissionless chain where machines can do commerce with machines, right? And in the beginning, it wasn't. We can go back and look at that deep dive, but there was a lot of protocols that basically revolved around that. And I think, in my opinion, it answers the question to why was Bitcoin allowed to succeed, right? Why were we left? Why were we left sort of unattended, if you will, to let this either work out or fail, right? And I think it's because Bitcoin answered a lot of the questions that hadn't been answered, and a lot of the problems that hadn't been answered. Double span, the Byzantine generals dilemma, a lot of things that are necessary for the machine economy that we're coming into, or they knew we were coming into. It's not a new thing, right? Because people are like, well, AI is new, so why, you're saying that they invented it back then for blah, blah, blah. No, that's not what I'm saying. What I'm saying is that economists have been trying to fix this issue for a long time. And one of the problems that it solves is exactly the problem that we would be having right now if we hadn't invented it. Let's pretend Bitcoin never got invented. Let's pretend there's no digital assets at all right now, but we've got AI. We got a bit of a problem, right? It means they can't transact with each other. They can't pay bills for you. They can't, right? And that's the simple shit. That's for us. You got to think on a bigger level, on a business scale. So I think it's one of those experiments that was allowed to play out. And we stress tested it, right? We found every possible issue that there possibly could be. And all of the things that make crypto complicated for us, think about it. All of the things that make, like, was the system built for us? Right? Well, is it easy for humans to use? Look at some of the problems that we have, like some of the learning curves that you have to get through. With like just what we've been talking about lately. Like we're literally sitting here rolling entropy to get, rolling dice to get entropy for our passphrase. not forgetting your words, making a mistake on an account number. All of the things that you could get wrong are things that AI can do in a heartbeat without even, it's not a problem for them, right? The friction is with humans using the system. But I don't think that takes any of the romance out of Bitcoin, right? I think that cypherpunks created Bitcoin for the reasons stated, right? For the privacy, for the freedom. But I do think that it was allowed to succeed because it answers a couple different questions that we needed answered. If it wasn't beneficial, it would have been crushed. We're just lucky enough to be in it early enough to make money off of it. All right. So let's go dig into Russia and see exactly what they've got going. A second, let me get this off the screen. All right, we're going to cover Russia first with a couple pieces, and then we're going to go into the stablecoin rails and see how we can benefit. Everybody got audio?
Shazam!
Very good. All right, Russia, then stables.
The US dollar functions as the primary architecture of global trade. When a buyer in Japan purchases copper from a mine in Chile, the transaction almost always settles in dollars. The SWIFT messaging network is the central nervous system of this architecture. It links thousands of banks into a single cohesive system, allowing trillions of dollars to move across borders daily. Controlling this system provides the ability to economically isolate any nation, severing it from world markets without deploying a single soldier. In February 2022, Russian forces moved into Ukraine. In response, Western nations deployed a coordinated financial counterstrike designed to cripple the Russian economy. Half of Russia's foreign currency reserves were frozen, and the country's largest banks were disconnected from SWIFT, cutting off the flow of Western capital. For an economy built on exporting energy and importing foreign technology, losing access to international payments creates a massive, immediate vacuum. This forced the Kremlin into a corner. To survive, they had to engineer a parallel doorway to move value completely outside the reach of the global banking system. The Bank of Russia began this pivot by shifting away from traditional commercial banking toward a new sovereign digital architecture. They accelerated the digital ruble, a central bank digital currency, or CBDC. Unlike money in a standard bank account, a CBDC is a digital asset programmed and tracked directly on the state's own books. Traditional payments move through a tangled web of intermediary banks. A CBDC creates a direct line to the state's central ledger. Settling on this internal ledger makes capital flows invisible. The money never enters networks a foreign power can freeze. The digital ruble guarantees the state maintains absolute internal economic control, even if it is completely severed from the outside world. However, an internal CBDC cannot solve the problem of international trade. It has no value to a foreign supplier who needs to be paid for vital imports. To bridge this gap, Russia turned to a secondary solution, authorizing and state-sponsoring cryptocurrency mining on an industrial scale. Sanctions left Russia with massive energy reserves it could no longer sell easily on the global market. Instead of letting that oil and gas sit idle, the state repurposes it to power vast server farms. These machines compute the complex equations required to mine cryptocurrency. This process transmutes physical energy into digital assets. Russia creates its own borderless purchasing power, effectively laundering its trapped energy into a global, uncensorable currency. These state-sponsored digital assets are then moved onto decentralized global networks, where they can be traded without permission. This creates an operational loop. Mined crypto is exchanged for essential foreign imports, allowing trade outside the SWIFT system. Crucially, the US dollar never enters this chain. Because the loop exists on decentralized ledgers, Western sanctions cannot take hold. The synthesis of absolute internal control and decentralized external bridges creates the digital wall, a system designed to make sanctions irrelevant. This ecosystem is a live proof of concept for a parallel global economy. It is no longer a theoretical exercise, but a functioning alternative for a major nation-state. Other nations facing sanctions are watching this experiment. They see a viable path to maintaining international trade while remaining insulated from Western financial pressure. Routing around SWIFT provides a reproducible framework. It offers a way for any country to build a digital financial infrastructure that is independent of Western oversight. For decades, a single financial system unified global trade. Now, that shared architecture is splitting as nations develop competing, non-interoperable ways to move value. The weaponization of digital ledgers provides a blueprint for a fragmented world order, one where economic sovereignty is defined by code rather than geography.
Think about this for a second. You get sanctions put on you. You're a country that exports oil, right? You export your oils for tech goods. SWIFT cuts you off from the system. But there's literally no way for you to move your oil or to get your goods. And it's been how long since this war started? So now take it back to first principles and really look at the problem that you have. You've got oil that's backing up. So you've got free energy coming out of the ground, right? And you can't transact with the world because you're being shut off of SWIFT. Just use the oil to mine the Bitcoin. What's the difference? Right? You're turning the oil into capital that you can then use. Yeah, I was playing around with Omni a little bit. I use Omni to fix. Omni's really good at editing. So like once I have a base video put out, I push it through Omni and I fix anything that needs to be fixed. But for the quick deep dives, I use Notebook LM is like my research stack. Right? What I like about it is I can gather all the research, right, that's valuable, that's actually real, and I give it to Notebook LM. And then whenever I talk to Notebook LM or I have it do anything for me, it only pulls. You know what I mean? Like garbage in, garbage out. That's the problem with AI. Right? AI is only going to be as good as what you give it. So I keep it on a really tight leash. You know, I do all the research. I pull everything that's valuable. I write up the report and my perspective on it. And then that's what Notebook LM has to pull from. Doesn't go on the internet and find crazy shit, you know? So I don't have to worry about hallucinations. All right, let's get into, let's cover that a little bit deeper on the slides. I mean, that's the difference between AI slop and a AI assisted sort of report, right? They're two completely different things.
Fam, we intercepted something big on the geopolitical chessboard, and I stripped out all the noise to give you the raw mechanics. On August 4th, 2026, Vladimir Putin signed a 287-page piece of legislation, the Federal Law on Digital Currencies and Digital Rights, Russia's version of the Clarity Act. It goes into full effect September 1st, 2026. The headlines are calling this a Bitcoin standard story. That's a lie. This isn't a nation falling in love with decentralized cryptography. This is a cold, calculated play about a nation's access to survival-level capital. The Kremlin's own position is blunt. Any sovereign nation holding dollars or euros can be cut off from its own money at any moment, and Western payment infrastructure has been weaponized as a tool of unfair competition. Lock in. Three forces, pulling in different directions at once. Evading sanctions, overcoming swift disconnection and frozen FX reserves after being cut off from correspondent banking in 2022. Monetizing energy, converting stranded oil, gas, and mineral wealth into liquid capital. Domestic control, maintaining an iron grip on internal monetary velocity, so this new flexibility doesn't become a backdoor for citizens to escape the ruble. Solving all three at once is why Russia needed 287 pages instead of a simple ban or embrace. Before 2022, Russia's financial existence depended on SWIFT and USD-EUR correspondent relationships, access that could be revoked instantly. Money between countries routes through a domestic bank, a regional clearinghouse, a major institution with international clearing relationships, intermediary banks, and finally, the seller's account. And almost every chain touches a U.S. institution somewhere. That's a correspondent account, and whoever controls it controls whether trade happens. When cut off, Russia still had buyers for its oil and gas. The bottleneck was getting paid. Two opposite tools: the digital ruble, absolute state control, centralized and tethered, domestic surveillance and trade, a closed sovereign ledger. Decentralized crypto, Bitcoin, USDT, state-backed mining, borderless liquidity, permissive and evasive, international settlement and sanction evasion, open decentralized protocols nobody controls. One locks citizens inside the system, the other lets the state move freely outside it. That's the entire point. ACBDC issued and monitored entirely by the Bank of Russia. Zero mining, zero decentralization, zero privacy. Programmable capital bypasses commercial banking bottlenecks. Total transaction surveillance gives the state absolute visibility over monetary velocity. Only about 10% of citizens would willingly accept salaries in digital rubles, so the state pays commercial banks a processing fee to push adoption. Rollout: September 2026 for the 12 systemically important banks, September 2027 for businesses over 30 million rubles, September 2028 universal. 4 steps: local currency initialization, CBDC conversion, a direct digital swap through a bridge protocol connecting central bank digital currencies across borders, and partner local currency settlement. No correspondent bank, no SWIFT message, no U.S. institution anywhere in the chain that could freeze it. Same fundamental idea as BRICS Pay, a settlement rail, so trade between sanctioned economies doesn't need Washington's permission. Input: physical energy, sanctioned and stranded, oil and gas that can't easily be sold for hard currency. Mechanism: state-backed hash rate, running that energy through state-controlled mining infrastructure. Output: borderless digital capital, unsanctioned and movable anywhere with an internet connection. Wanting to buy Russia's resources and being able to pay for them are two different problems. Sovereign mining solves the second. 2021, total domestic ban proposals. 2022-2023, that stance collapsed into ambiguity, and gray market mining expanded into the enforcement vacuum. 2024, Law No. 349/FZ formally legalized cross-border trade settlement in crypto, the first real crack. The August 2026 law is the full-scale expansion of that precedent. This is what regulatory capitulation under sanctions pressure looks like. Years of grinding, forced adaptation, not a sudden ideological shift. Cash goes into an OTC desk, converts to USDT, a peer-to-peer bearer asset settling on an immutable public ledger with zero correspondent bank in the middle. It routes straight through the wall of Western sanctions, because there's no institution for Treasury to pressure. An overseas supplier receives it and converts back to local fiat. No transaction cap under the new law. Any Russian import/export company can now legally settle wallet to wallet across borders. The same openness that lets the state settle trade freely also invites the opposite from ordinary citizens: capital flight into assets the state can't easily seize or track. State strategy wants inflow. Retail behavior, given the same open door, wants out. That's why non-qualified investors are capped at 300,000 rubles, roughly $3,700 per year, gated behind a suitability test, and why using crypto for domestic purchases stays flatly banned. Permissiveness is one-directional by design. Inside the shield, a controlled CBDC ledger, programmable and fully visible to the state, where citizens live increasingly by mandate. Piercing outward, decentralized settlement, where the state and its corporate entities trade internationally, completely outside domestic surveillance. Total containment inside, total freedom of movement outside, enforced by law, not technology. The digital ruble and crypto aren't competing systems. They're two halves of the same defensive architecture. Pre-2022, a unipolar ledger, SWIFT and USD dominance. Post-2024, the splinternet of finance, multipolar digital islands. BRICS pay for emerging markets, sovereign CBDCs like the digital yuan and digital ruble, and corporate stablecoins backed by U.S. Treasury debt about to get a massive tailwind from the Clarity Act. Every major power is fighting for a piece of this infrastructure. Banks protecting deposits, states protecting capital controls, the U.S. exporting its debt onto smartphones globally. For regulators, sovereign states will keep weaponizing decentralized protocols, not banning them. Russia just proved that's the more effective play. For intelligence, on-chain behavior is now the primary theater of statecraft monitoring. For investors, the era of one unified global financial ledger has definitively ended. You are not a state and you are not a multi-billion-dollar bank. To the legacy system, you're the deposit base. The sovereign stack isn't academic anymore. It's a survival requirement. End of transmission.
Don't let that last line on the slide before the last go unnoticed, because that was a bar. But let's go through this. Russia has one main problem, like we talked about earlier. Main problem is that all of their trade basically had to be allowed by us, right? Which is why we've always hung sanctions over their heads to try to get Putin to behave. So their issues, right? They have to evade sanctions, right? They have to be able to convert their natural resources into capital. Sanctions keeps them from doing that, right? Normally there's more than enough people to buy Russian oil. They're not short of oil and they're not short of customers. Whenever somebody tells Elon he's the richest man in the world, he corrects them. He says, I'm not the richest man in the world. The richest man in the world is Putin. The reason that Putin's the richest man in the world is because his net worth encompasses all of Russia's natural resources. And his main problem has been, how fast can I get this shit out of the ground and cashed out, right, before the world crashes in around me? Now, the third problem is domestic control, right? You have to keep control of the Russian people. The only way the Russian system works is if the oligarchs and the state stay way high and the people are all low. But the people can also revolt. People can also, so they have to be held with an iron hand, which means that you don't want your transactions visible to them. So crypto is legalized in Russia for transactions. Everybody inside Russia, for the most part, is capped at 3,000 rubles a year. I'll do the math and figure out exactly what that is, what kind of salary that would be. But as far as like what they're used to, right? But the only way you could do that is with a CBDC, right? So they went with a two-pronged approach. They went with the CBDC inside of the country to be able to monitor what the citizens are doing, right? Programmable, they don't have to mint it. You just literally just push them out, right? It's your ledger. State controls the ledger. But their plan for international trade and their plan for the oligarchs, right? Their plan for Putin and his buddies. The Putin takes all his oil out of the ground. If you can't get people to buy it because of the sanctions, then you have to turn it into Bitcoin. Because remember, they're not mining the CBDC. CBDC, they just press a button and more pops out. Right? They have to mine the Bitcoin. So energy with hash rate backed by the state. So state-backed mining on an industrial scale, powered with the free oil coming out of the ground, spits out a shiny new Bitcoin. Bitcoin gets sold over the counter for stables. USDT makes it through Western sanctions to wherever it needs to go. Back to business as usual. The US can no longer stand in your way. Right? Sanctions don't mean anything at this point. And when you consider the fact that the demand for oil in the next 20 to 30 years is going to go down severely, which is why the UAE started pulling oil out of the ground, left the cartel, and they're starting to pump as much as they possibly can. Right? Because remember, when they were in OPEC, OPEC would let them know how many barrels of oil they can pull out of the ground. They were controlling the price. Well, they had the most oil in the ground. So they're the ones that were suffering the most by the restrictions. So by leaving, they're unrestricted now to pump as much oil as they want, get it moving. Their issue is that they can't move it through the strait. So how long do you think it'll be before other countries that have too much oil and are unable to move them look at what Russia did and start getting little light bulbs above their heads? So why do we care? Well, we care because one of the biggest narratives right now, at least ones that I've been talking about the most, have been the stablecoin rails, right? Your Bitcoin, Ethereum, Solana, Tron, the upcoming rails, right? XLM, Canton Network. This money has to move somehow, and it's going to move through stablecoins. And the way we can invest in it is obviously Bitcoin, right? That big bag, the one that keeps you safe, the one that they're dumping all their oil into to mine. It's obviously an asset you should be holding on to, not financial advice. But the stablecoin rails, right? These stablecoin rails need to be revalued, right? BNB, Ethereum, Solana, Tron. Neither one of those are valued with the idea of holding the world's currency. And this isn't just Russia, right? Because the United States, because of what's happening in the strait and because of losing the petrodollar, has gone into the stablecoin dollar, right? We talked about this. The old system was everybody needed to buy oil. Everybody needed to buy oil in US dollars. Nobody wanted to hold US dollars because of the debasement. So they bought bonds and they bought US equities, right? So they bought US debt and they bought US companies. And then when they needed to buy their oil, they sold that US debt, they sold the US companies, and they bought their oil. Well, that's not needed anymore, which is why you're seeing bonds go down, right? Because all of these countries that were holding bonds to preserve that wealth, to sort of fight debasement, are now moving into metals, right? So what do? How do you keep the strength of the dollar? How do you convince the world to buy the US debt? Because that's what it is, really, right? You need to get somebody to buy your debt. Well, that's what the stablecoin bill is about, right? Every stablecoin issuer has to have a one-to-one back to that stablecoin in either US fiat or US or bonds, right? So what you've done in essence is you've taken it from every country supporting the US debt to everybody with a cell phone that's transacting in stablecoins, buying US debt, right? That's how you stay the world reserve currency. And Russia's just trying to find a way around it. Right. So inside of Russia, going to be very controlled. But outside, the part that they don't get to take advantage of, right? Russian people will never get to take advantage. The rich is just going to get ridiculously richer. That's sort of the nefarious part of CBDCs. I'll listen to this last slide real quick. And then we'll move into the stablecoin part.
SWIFT and USD dominance. Post-2024, the splinternet of finance, multipolar digital islands. BRICS pay for emerging markets, sovereign CBDCs like the digital yuan and digital ruble, and corporate stablecoins backed by U.S. Treasury debt about to get a massive tailwind from the Clarity Act. Every major power is fighting for a piece of this infrastructure. Banks protecting deposits, states protecting capital controls, the U.S. exporting its debt onto smartphones globally.
Think about that for a second. That's exactly what's happening. The U.S. is literally exporting its debt to every user, every on-chain user that has a smartphone or holds stables in any way, right? Every stable that you buy means the company you bought that stable from has to hold an equal amount. The more we transact, the more debt they hold. The more debt they hold, the stronger the dollar remains. It's brilliant. I don't tend to give governments too much credit, but you gotta recognize a brilliant idea when you see one. And that's what my whole thesis is behind investing in the stablecoin rails. Because if this succeeds, and I mean, you've got the power of the government behind you instead of stopping you for once, right? Like what we want and what they need to happen are aligned for the first time, at least in my memory. I can't remember the last time. I mean, you got to remember, I've been in crypto for a long time. So we went through choke point 1, choke point 2.0. I mean, we've been fighting the Fed for the longest. This whole thing of the government being on our side and people talking about Bitcoin is brand new. Still, I haven't got married to the idea that it's going to stay like this forever. Because remember, presidents change, right? Every 4 years, you got to worry about things staying the same or not. But what does make me feel better about it is that the U.S. needs it. Right? There really is no alternative. It makes sense. You can be mad that Trump made a bunch of money and you could try to put some ethics laws in it and all that, but you're going to pass the Clarity Act. Right? Because at this point, it's a national security imperative.
Cryptocurrency began as a structural challenge to the status quo, designed to exist outside the reach of any central government or traditional bank. Stablecoins offered a way to bring this vision to the global economy. By pegging digital tokens to the US dollar, users could move billions in value across borders without relying on a local banking branch. Most of the current industry focus stays locked on the Layer 1 wars. Investors and developers compete to build the fastest and cheapest blockchain, believing the winner of this technical race will control the future of money. While that race continues, the digital dollars moving across these networks have quietly transitioned into a centralized infrastructure. Winning the blockchain technology war builds the roads for global finance, but the roads are increasingly designed to serve the existing geopolitical order. Ethereum's current role in the ecosystem highlights this shift. Once positioned as the world computer, it now struggles to support daily payments due to a 12-second block finality, the time it takes for a transaction to become permanent. The network's transaction fees fluctuate between $1 and over $20. For most people, these costs make simple transfers impractical. Consequently, daily active stablecoin users on Ethereum have dropped to just over 500,000 wallets. The network has effectively become an institutional layer, reserved for high-value settlements. This diagram contrasts Ethereum's activity with Tron's massive influx of users. Tether's USDT accounts for 98% of Tron's stablecoins, totaling $92 billion. Tron moves $23.8 billion daily in small transactions. However, energy costs have recently pushed fees into the $1 to $3 range. Retail capital moves like water. It abandons any network the moment the fee structure becomes too expensive for the average user. As fees on Tron increased, users migrated to the BNB chain. By August 2026, BNB chain overtook Tron as the largest stablecoin network, reaching over 79 million holding addresses. BNB chain secured this position by keeping fees between 5 and 20 cents while maintaining a rapid 3-second finality. Solana represents the most efficient iteration of this model. It offers a blazing 400 millisecond finality speed, coupled with a fixed transaction fee of just 1/10 of a single cent. This chart illustrates the result. Solana's active monthly stablecoin addresses grew by 608% over 2 years. This reveals a structural divide. The base layer is the blockchain highway, while the application layer consists of the stablecoins driving on it. A fast, cheap highway provides no benefit to the user if the network lacks sovereign control over the assets traveling across it. Major stablecoins like USDT and USDC function as highly centralized ledgers. They are smart contracts running on top of blockchain networks rather than independent digital cash. These smart contracts contain built-in controls. These backdoors allow the issuer to override the rules of the underlying blockchain at any time. Tether and Circle coordinate directly with U.S. law enforcement and the Treasury Department to monitor transactions and freeze assets on-chain. The censorship resistance of a network like Solana or Tron is irrelevant if the issuer can freeze the asset itself at the code level. In April 2026, Tether bypassed Tron's base layer permissions to execute a direct freeze in coordination with the U.S. Office of Foreign Assets Control. The action instantly locked $344.2 million in USDT across 2 specific addresses. This freeze targeted wallets linked to the Central Bank of Iran. 2 months later, Tether executed a second freeze, locking 131 Tron wallets linked to ISIS-K funding networks. These freezes took place on Tron, demonstrating that the underlying network remains subordinate to the stablecoin issuer's compliance protocols. For dollar-pegged assets, the vision of a system existing beyond state reach has met the reality of smart contract controls. Digital dollars will continue to move on hyper-fast blockchains, but those roads remain fully integrated into traditional U.S. enforcement.
Fam, sit down for this one, because we're about to run a full technical audit on the 4 blockchains carrying damn near every dollar of stablecoin liquidity on planet Earth. As of August 2026, we're talking $272 billion in circulating stablecoin supply and over $10.2 trillion in adjusted annual transaction volume moving through 4 rails: BNB Chain, Ethereum, Solana, and Tron, the BEST framework. This isn't a popularity contest, it's an infrastructure decision, the same way a payment processor picks a settlement rail. Each of these 4 chains runs on a completely different consensus model, and that model is exactly why they behave so differently under load. BNB Chain runs Proof-of-Stake Authority, a concentrated validator set built to maximize throughput and keep overhead low. Ethereum runs Decentralized Proof-of-Stake, prioritizing protocol-level security above everything else, with EIP 1559 managing fees through a base fee burn and priority tip. Solana stacks Proof of History on top of Proof of Stake to hit sub-second synchronization. Tron runs Delegated Proof of Stake with a specialized energy and bandwidth resource model, and it's become the primary rail for USDT liquidity worldwide. This audit runs on 3 pillars: network velocity, economic friction, and state sovereignty. The risk that regulators can simply reach in and freeze your money regardless of which chain you picked. That third pillar is the one nobody talks about, and it's the one that matters most. Ethereum plays institutional anchor, the vault, where security-first design and a massive decentralized validator set matter more than transaction cost. BNB Chain runs retail at scale, optimized for cheap, fast, high-volume transfers backed by a centralized exchange ecosystem. Tron is the global remittance engine, moving cross-border cash regardless of resource costs. Solana sits at the efficiency endpoint, built for high-frequency, near Web 2 payment experiences. The correlation is direct. The more decentralized the validator set, the higher the latency and fee volatility. BNB and Tron run concentrated validator sets that are easier to coordinate. That's why they're fast and cheap. Ethereum's massive validator set is exactly why it's slow and expensive. EIP 1559 deconstructs every transaction into a burned base fee and a priority tip, supposed to bring predictability, but fees still swing $1 to $20 plus. 12-second block time is a deliberate strategic choice, keeping the pace slow enough for a vast, genuinely global validator set to reach consensus. The cost: 509,400 daily active users, third place. Holders capped around 26 million, last place. But don't sleep on the L2 story. EIP 4844 proto-dank sharding dropped fees on Base, Arbitrum, and Optimism into the 1 cent to 10 cents range, turning Ethereum into a hub-and-spoke model. L1 for settlement, L2s for liquidity. EIP 1559 deconstructs every transaction into a burned base fee and a priority tip, supposed to bring predictability, but fees still swing $1 to $20 plus. 12-second block time is a deliberate strategic choice, keeping the pace slow enough for a vast, genuinely global validator set to reach consensus. The cost: 509,400 daily active users, third place. Holders capped around 26 million, last place. But don't sleep on the L2 story. EIP 4844 proto-dank sharding dropped fees on Base, Arbitrum, and Optimism into the 1 cent to 10 cents range, turning Ethereum into a hub-and-spoke model. L1 for settlement, L2s for liquidity. Delegated proof of stake with a specialized energy and bandwidth resource model instead of a straightforward gas fee. $91.8 billion in stablecoin supply. 98% USDT Tron is the default rail for Tether globally. $23.8 billion moving daily, mostly transfers under $1,000. Stake TRX ahead of time and transactions run free. Skip it. And a standard transfer burns 30 to 60 TRX, a real cost of $1 to $3, pricier than Solana or BNB for unstaked wallets. 76.1 million holders. Tron owns cross-border USDT liquidity, full stop. Proof of history stacked on proof of stake acts as a cryptographic clock, letting validators agree on transaction order without waiting on each other. The architecture behind 400 milliseconds finality. Fixed base fee of exactly 5,000 Lamports, $0.001 per signature, and even priority fees during congestion rarely push cost past a few cents. The number that matters most, a 608% surge in active monthly addresses, an explosion, happening while Solana still catches up on total holder count against BNB and Tron. Ethereum, institutional settlement, $1 to $20 plus, 12s, 26 M holders, smallest base, highest security. BNB chain, retail giant, 5 cents to 20 cents, 3s, 79.3 M holders, new leader. Tron, global remittance, $1 to $3 unstaked, approximately 3s, 76.1 M holders, the USDT default. Solana, max efficiency, $0.001 flat, 400 milliseconds, fastest growing at 608% YoY. Rank adoption, and it's BNB first, Tron a close second, Ethereum a distant third, with Solana Base/Arbitrum emerging behind. But knowing the numbers is only half the audit. None of these networks actually control whether your money gets frozen. Blockchains are permissionless at the base layer. True. But stablecoins aren't native assets. USDT and USDC are smart contracts with built-in backdoor controls. Tether and Circle coordinate extensively with OFAC and can freeze assets instantly, no consensus vote required. BNB Chain's concentrated validator set makes it more susceptible to direct regulatory pressure at the protocol level. Ethereum's vast, decentralized set gives it the highest resistance to that coercion. Issuers can still blacklist, but the network is hardest to strong-arm. Tron sits worst of all. Sheer USDT concentration makes it a natural enforcement target. April 2026, Tether coordinated directly with OFAC. $344.2 million in USDT, instantly locked, just 2 specific Tron addresses linked to the Central Bank of Iran, part of a broader mandate targeting shipping operators and intermediaries facilitating illicit petroleum flows. 2 addresses, $344 million, gone, with a keystroke. No governance vote, no network consensus, just Tether flipping a switch on its own smart contract. Not a one-time event, a pattern. August 2026 to 131 additional Tron wallets systematically locked in a single sanctions update tied to ISIS-K illicit finance networks. Regulatory enforcement via stablecoin issuers has become a recurring operational standard. Tron takes the brunt because of sheer USDT concentration. Ethereum's decentralized validator set makes the protocol harder to coerce at the network level, but issuers can still blacklist addresses there too. Consensus decentralization protects the network from shutdown. It does nothing to protect the asset on top of it from being frozen. Solana, high volume, low cost technical leader. Ethereum, institutional, security critical settlement layer via its hub and spoke L2 model. BNB Chain and Tron, retail and mass adoption leaders through deep exchange integration, despite Tron's $1 to $3 costs and BNB's validator centralization. The market gives you freedom to choose your rail, security, scale, or speed. But you're still driving a centralized vehicle. Network decentralization is permanently overridden by asset centralization. Compliance capacity has become part of the product itself. Know your rail, know who's really holding the keys. End of transmission.
All right, so yeah, Bitcoin's still sitting here. So that's my thesis behind why I'm concentrating on the rails. I mean, if we want to look at, so everything's sort of, Genius Bill already passed, right? That's what frees up the money for stables. Clarity Act is what gives the control that's necessary for the US to allow it to happen. Now, if you look at Tron, you can get a little bit of an idea of what it looks like when they've already got the control and the money's flowing. This is Tron on the weekly. Hold on, just to make it make sense. It's 2022. Right? Compare that to shit, anything. Now, you're probably thinking the same thing I'm thinking. Okay, great. I'm not buying this shit at the highs. I'm not either. Right? Waiting for this to come down has been annoying to say the least. Right? This was the top of our market. Crazy you even have to draw it because that's where Bitcoin topped. Right? I'm going somewhere with this. Right, so that's where Bitcoin topped. Let's get the rest of the squad up there with them. Ethereum. I don't know. Maybe. You see the difference? In my opinion, this is what's coming for those chains. Right? This is what it looks like. And remember, this is Tron. They don't have everything else going for them that Ethereum, Solana, right? This is just what it looks like when you're capturing stablecoin transactions. It's almost like it doesn't seem to matter whether it's a bear market or not, right? Because the stables are still moving. Which means one of two things. If these remain the top 4 chains, then you could expect retracements during the bear market for Ethereum, Solana, and BNB to be muted in the future. I don't know if you can count on Sol going down 99% anymore once Clarity Act passes. Doesn't matter for now, but it matters for the next bear market. Right? And it also matters if you're thinking about picking these up for the future. So yeah, that's it. We've talked about it a bunch, right? We've talked about the stablecoin thesis. We've talked about the stablecoin dollar and how it ensures dollar dominance going into the future. We're just starting to see all of these other stories pop up that link in, right? Like puzzle pieces. Get all this back up on the screen. I put everybody to sleep. I know the initial instinct is you can't make any money off of stables. I think Tron proves differently. The inflow of stables, right? That money has to get out of there. So it adds more money to the system. But the rails that it's going to come out of Russia in are why we focused on the stablecoin piece after. That's how it's linked. We keep waiting for the Clarity bill to pass so that we can get all that US money flowing through stables to push those systems, right? But now we have Russia jumping in, doing the same. So it's like a catalyst. Doesn't mean that they're going to immediately go up, right? It just means it opens a new revenue source for the stablecoin providers and the rails. The rails are what we're interested in because that's what we can invest in. For me, it's just a proof of concept. Right? If Putin's going out of his way to mine BTC, excuse me, then it's just something that pushes adoption, you know? And it's not just him, a lot of other countries have the same issue. More oil than they know what to do with, worried that they're running out of buyers for the oil. Well, with mining, you don't need buyers for the oil, right? You don't need that middleman to turn it into capital. You just got to run it through some miners. And Russia's a little different. When Russia says go, everybody goes. It doesn't have to make its way through committee. It's not going to get held up for, I imagine as we speak, they're clearing ground for brand new facilities. Oh, they're screwed. As a Russian citizen, that's like complete control. Yeah, it's worse than that. CBDC controls are ultimate. Like they can put an expiration date on your money. Yeah, as Tron gas prices go up, BNB starts to get more of that stable coin flow. The stable coin flow is always going to go through the cheapest chain, right? There's no love there. I need to move money. I'm going to do it for the cheapest that I can possibly do it. And these are small transactions, right? Under $1,000. That's where Tron really shines. Yeah, it's part of the thesis of gold and silver having to be repriced for sure. Probably China. For all we know, they just loaded up on ASIC miners. The TLDR really is that it's screwed up for Russian citizens. It's bullish for Bitcoin. Not bullish like turn around and change the price bullish, but use case and adoption sort of bullish, and that all that money is going to have to move out of Russia somehow through some rail, and your job is to choose the one that you think is going to get the majority of it and try to buy it as cheap as possible. If you like, if you subscribe to the thesis. Good night, H. Let me I'll show you 2026 bull market layout. So BNB. For that, well, we're basically at that retest. Let me make sure my magnet is on. And we're basically at that retest right now. This gap in the VPVR is what I'm sort of shooting for. Basically that high volume node, right? So getting above breaks your downtrend and gets you above that high volume node. A rejection, in my opinion, starts that drop. I'm trying to DCA underneath 4. And then my buy zone is down closer to like 330. I know it's like a 50% drop. No, I know. I can hear your guys' thoughts. But I'm telling you, if it falls into this gap, it's going to be quick. $488 would be a logical place for it to stop and sort of pattern out. But between 560 and 488, there's not really a whole hell of a lot when it comes to volume. But we'll see. We'll see what it does here. It's going to be hard to test. We need Bitcoin to take its drop. Once Bitcoin takes its drop and we see how it affects the alts, we'll have a better idea of what the bottom numbers are going to be. But I don't see Bitcoin dropping underneath 60 and BNB holding 541, And then we've got Tron we looked at already. Like, what are you going to do? Would love for it to come down. This is a dream. Right? But it's just not going to happen. Maybe now that you're seeing some of that outflow into BNB, right? Maybe if the transactions slow down, we can finally get a drop. But the thing is, the transactions are already the cheapest. But if you stake Tron, then it's free. So that's why you're not seeing sell-offs. Or damn near free. Ethereum, way closer to where we want it. right? Couple levels to lose. And then soul. Right. For the most part, underneath its levels already. So somewhere in those ranges. Nah, that means it's not going to take shine because remember the value of it going up isn't going to be from. We got it. So in crypto, we're used to this idea that if we pick the right coin that everybody else picks, when they buy it, the price will go up. Right. But these projects are coming into their own. We're talking about actual revenue. Right. So yeah, part of it is that this needs to be repriced with the idea of being the rail for the world's money, or at least a fourth of it, whatever, right? That needs to be repriced. So there's part of that, right? But the transactions are creating revenue. What these chains do to capture that revenue is going to be important. Are they going to buy and burn? Right? Are they going to use that transaction volume to buy Tron, to buy Solana, to buy ETH? Right? Is there a plan for that? ETH is a little different, right? Because ETH is the institutional layer. Money's coming into ETH regardless. So it's not to take from take from Bitcoin, you would have to take speculative money. Right? They don't do what Bitcoin does. But yeah, if they go crazy, right, then you're gonna have dominance on Bitcoin drop like it normally does, like it didn't do this time, because nothing took dominance from Bitcoin this time. I just honestly think this is gonna be more of a I think this is gonna be more of a utility bull run. And I'm putting myself out there by saying it because we just had the most speculative bull run ever with the meme coin super cycle and all that shit. But I think with what's going on, like people are going to try to position themselves to be in assets that have uh, a um a crucial role into the system that we're going into. Right? It's like that part of I keep saying it's like that part of the .com bubble where you had all of these .com companies, but it was a million of them, a million search engines before we landed on the Google, a million. It's just, there was still so many. It was like the fight that we're having right now. Who's going to be the L2? Who's going to be the L1? Who's going to be the Oracle? Who's going to be the liquidity layer? It's the same fight that they were having back in the day for .com. And then the bubble popped, right? And then when the bubble popped, something happened. People didn't just throw their money back into anything that had .com in it, right? They picked the Googles and the Microsofts and the Apples. They picked the companies that are now household names. That's the moment where MicroStrategy stopped getting money just because it was a .com, right? And Microsoft took the software lead. It was so that's sort of the moment that we're in right now, in my opinion. And we just saw the ultimate sort of example of a peak bubble, right? Where it was literally all shit coins, just shit coins going 1000x left and right. And that's a sign of a top, of a major top. meaning narrative wise, in my opinion. We'll see what happens. Who knows, man? Maybe we just degen back into pandas and freaking cats. But the way it's looking right now, I think this is going to be a more serious cycle. And with more serious cycles comes more serious money, and money that doesn't tend to like come in and out, right? This is the time that I think institutions and nation states start building long-term positions in the front runners. Yeah, Link is a great example. I mean, Link is the glue that holds everything together. So narratives are going to be very important. I've always sort of run narratives the same way. I play the first 1 and 2 in each narrative, right? Like if we're doing like let's say 4 oracles, right? I'd be like Link and Pith, right? 1 and 2. And then like a dark horse, right? Something, a brand new project that just came out this year, that just came out for this bull market, that's sitting at a ridiculously low valuation. The idea is when the narrative runs, my 1 and 2 cover whoever wins the race, right? And 1 and 2 making the race build the speculation for the dark horse. I don't need the dark horse to get to $1 billion market cap. If I pick up the dark horse at $100,000 market cap, there's room there for it to run. And that's usually how I play the narratives. And I think this year is going to be a good time to sort of do that, right? AI, what's the front runner? What's its biggest competitive, what's the biggest competition? How big is its competitive moat? And then you allocate, you don't have to play every narrative, by the way. I think there's something to be said for playing narratives that you have some experience in. Like if you're a gamer and we're going into a gaming narrative, you have an advantage over somebody who doesn't game. Right? If you have experience in the narrative, there's people that specialize in one narrative, and that's literally all they trade. I don't like to do that because narratives take turns, like running. I still like Sui. It's just Sui's new, right? Sui hasn't earned the right yet to hold that much weight to carry the responsibility that Soul's carrying right now. But I still believe that Sui's gonna have its Soul year. None of this takes away from Sui. Sui's just young. But in that narrative, in that high speed, high throughput, cheap blockchain sort of narrative, that's what I would do, right? Solana Sui, and then a dark horse. 1 and 2, and then a dark horse. It's just important to understand where these things lie, right? To understand that Ethereum isn't in competition with Sol, right? Everybody puts them against each other, but they don't do the same things. They're not going to have the same customers. They don't have the same, you know what I mean? Their customers don't have the same security requirements. ETH customers don't care they have to pay $200 in gas fees to make a $2 billion transaction, right? Sol customers don't want to pay $100 in gas fees to buy $12 in meme coins, right? They're different narratives. They're different. When people come into crypto in the beginning, they put everything into the same bunch, cryptocurrencies. Oh, the amount of people that I've heard ask me what makes Sui a good currency. Like, no, that's not everything's meant to do that, right? Not everything's meant to be spent. Not everything's meant to be like $1, especially now with stablecoins. That's out the window. Like you use stablecoins for that shit, right? These are companies who provide services. Our job is to figure out if that service is needed. If it is that company undervalued for the service that it's providing? That's it. You got to go more legacy brain with this, right? Because we're getting into like revenue and actual like price to earning ratios and yeah, I'm still in that short, yo. I was just talking about it earlier, man. That gap that it has underneath it, bro. It's like I'm at my target, right? I could take profit now and be good. You know, GG's, good short, but something tells me that shit is just gonna print. All right, we finally got that 382 hit. Let's see if we can get a good type 2 here. It only took us an hour, not more. Let me see what we got for volume. A little bit of volume on the drop. We found some buyers. Stopping volume candle. Bullish engulfing. I'll bite. I got some time before dinner. Just set it up and wait for it. $45 seconds to see if we get this bullish engulfing or not. We'll take a look at the book. Vape mode. You keep trying to sell me shit. No, I don't trust you, Keo. I'm not gonna upgrade my damn subscription until you make it 2 weeks without screwing something up. Speaking of, why can I not use these sliders? You see what I mean? And then they want my money? Nah, gang. Something's wrong with this shit. Oh, I got more than enough reasons. Well, that's why they took off the damn. You messing with my shit. You gotta be kidding me. They're gonna make me do it. They're gonna make me create my own keel. What, you're bugging out too? Nah, now they're trolling me out. Yo. All right, you know what? They're like, oh, you think you're nice? Do it without any data. You know, do more than that to stop me. Mm. Liquidity is kind of persistent there at 65. Hmm. Hmm. Little bit of patience, which I'm like super short of right now. By the way, I think I need to eat. I think I'm hangry, is what it is. There we go. Thank you. This is that support resistance at 62.5 that I was saying is crucial for us to hold. It's good to see some it's good to see some orders down there. And then this is that leftover wall set above us. All right. The type 2 or not the type 2? That's the question. Well, daily open was the target, but I said if we didn't make it by daily open, then that drive to go up there sort of diminishes, right? It's less of a magnet. Well, this is the type 2 we're looking for. Less of a magnet because the daily open acts as a mean reversion. So once we get a new daily open, it immediately, like, we're immediately reverted to that mean, right? It's a brand new mean, and that daily open becomes the magnet. So it's just that little bit of pull, right? Is gone.
That's the type 2. Feels like it needs to be done more.
I'd like to see more volume come in. That's not doesn't make you feel too warm and fuzzy. I'm watching the tape to see if some aggressive orders come in, but I'm gonna eat, so I'm just leaving a low stop. Low stop, couple orders in case it comes down to 681. But my food's not here yet, so if this initial order holds, then I'll just ride that. Yeah. Yeah, you've got an M pattern, but it's not golden pocket. Well, it might be it might be close to it. Yeah, right there. But that's only if that's the intentionality, right? If this is meant to be a type 2, then it'll catch on any of these. Retest of the break of the 50. If it fails, you're going for a lower level, right? Low vector recovery. We know how this works. It's just a top, right? M's are how things top. More of a double top than anything. Watch this. My bad. I was talking into a muted mic. Watch this. Blood diamonds right there, right? FTX crash. Right on this peak. A little early. Still has a day and a half or a day and an hour, right, to print or not print. Price goes up today, but it was the same during FTX. It will start to flash. Yeah. So if you do it exactly by time, I'm trying to line up all the just don't pay attention to the price points as much as the timing of it. Like where that bottom is right there. So we'll see. If that's still there in a day, then we can compare it to bear market. Right? Bear market, blood diamonds. We had one, and it was at the bottom, and it was 361 days from the top. 5 days later, we hit bottom, 365-day cycle for the bear market. The reason I don't hate it is because we need that drop. You know, the difference here was that we had already sort of taken our drops, consolidated. FTX came in, gave us that low. We made that drop and then consolidated after. Right, remember, I keep talking about multi-month long consolidation. Well, that can happen after as well. This is when we hit our bottom. Right. We didn't leave for, well, when did we actually pull out? We broke that top 50 days later. Let me show you what this does for the Ichimoku too. Well, hold on. I'm getting too deep and we got to see if this holds. I know it's holding, but let's focus on this. I'll get into that later. Let's just say it lines up with a couple of things that we need to happen. Inverse head and shoulders. I don't know what in the 2 hour. My bad. I'm hungry. I'm eating sunflower seeds. Came down too far. But that doesn't get rid of the W. Right. Get up there. That's gonna piss me off. Yeah, I'm definitely hungry. My patience is like at 0. Right, so that's still viable. Question is, does it come down? But that's the one everybody's looking at, right? This is what the bulls have sort of been hanging their hats on. There are people calling this an inverse head and shoulders, though. Gareth comes to mind. Let's see. That was another idea that was floating around, but starting to lose its oomph. For me, I hate to be like deterministic about it, but for me, it's just the green July I was looking for. Right, coming right up to the base case, lower high, starting to see increased sell-offs. If that blood diamond prints on the 2-day, you're going to see a bunch of YouTube videos. The problem is it's not Trump's decision. I mean, it is, but he can't like executive order it. It won't stick. I'll take it though. Don't get me wrong. Shit. Listen, even if it only sticks for 1 tax year, take it. I don't know. Somebody heard my little spiel about utility and bought some link.
Dude, it's been so much fun over the past day and a half.
You've been trading it. It looks fun.
Yeah,
Actually, yeah.
dude, I was all in, but I'm out. I mean, I just, you know me, I don't have very high risk tolerance.
Yeah.
Dude, that was such a good move, though. I was actually gonna talk to you about it the other day, going, it was moving the exact opposite of Bitcoin for a while, for a few hours. And I can't just give it to Link because literally, dominance dumped.
Yeah. Nah, Sin has a point. Link is one of those that doesn't move a lot. So the psychology of it sort of works like this. Link is the obvious choice, but nobody buys it. But when everything else moves and then stops moving and nothing is going up anymore and everybody's looking for something that hasn't run yet, they usually go to Link. So you'll see Link sort of push before, sort of at the end of runs, like Sunlos was just saying.
Yeah,
Like you look at it compared to everything else and you're like, well, Link is great. Link is part of everything. Why hasn't, Link makes sense. It's been the what, last, what's the 10th or the 8th since it picked up in volume?
I mean, people make fun of me. They're all, "Oh, you and your little 5% pumps." Yeah, well, it's been 5% pumps like freaking 20 times.
Sometimes it's just about if it follows the rules, right? Some coins are easier to trade than others because they do what they're supposed to do. Consolidating at the 10-10 wick. I know this is just a 4-hour, right? But this is what Link tends to do at lows. Right. So the question is, what is going to be the bottom of this range? Right? Have we started to establish the bottom of the range? If you look at how we dropped, right? Wick down, got some volume, right? Found some buyers on that. And then went sideways for 2 years. Went sideways for 525 days.
Hey,
Right?
that's why I like it, man.
But every time it came to the bottom, it found buyers. Right? There was always somewhere there to pick it up. And it was like a 60% range. So you could have literally just traded this thing. But anyways, this is one of the most beautiful accumulation ranges of, I keep telling people, like, if you can only remember one pattern when it comes to bull markets, remember this one.
So that's a good example why I trade it, because like I know this sounds so like, oh, Notre Dame or whatever, but that what you just showed, ins and outs, getting in and out and in and out for a long period of time, just the compounding, man, is just crazy.
It's the floor for me, right? The fact that the value, right? There's a value there that has a floor. And that's what that sort of shows you, right? This sort of pattern shows you that it's found its bottom, lack of a better, right? And there was big fluctuations, like between like the bottom rung. We'll do wick to wick. So from wick to where it actually bottomed out at, there was still another 11%, right? But from the sort of base, like this was basically its base, right? It was another 21% down from there. And I'm not saying that this has started, like we could just be here, and then there's another drop. But I can't deny that she's sort of starting to look like my ex. Right? I'm not pulling the trigger yet, but I am trying to stay aware that this hold from 4 years ago is looking like it's doing its best impression. Let me get it right. I hate that my brain works like this, y'all. I know it's like I'm crazy, but just trust me on this. Patterns don't tend to repeat this closely by mistake. This is giving me hell right now. I just want you to squeeze and to, yeah, thank you. Right. I'm not saying that this goes sideways for 5 COD. I hope not. But I am saying that it's starting to, if you take every section individually, right, the drop and the pop up, that drop and that pop up, this top and this little accumulation. But yeah, worth keeping an eye on. Yeah, big. I'm still looking for September, October. It's like now everybody's saying the same thing. And then I say September, October, and they're like, well, that's what everybody thinks. Like, yeah, except I said that shit in November. It's not my fault that everybody agrees on the date now. I'm not gonna change my mind because everybody caught up.
Yo, Dbloc,
Yo.
you ever watch that series called Landman?
Call who?
Landman.
No, I don't think so.
Billy Bob Thornton. Anyway, it's a series. It came out 25, maybe 24. But oh my God, after like whatever being schooled on this town, and he's the oil guy, and he talked about how oil produces, you know, everything else from rubber and plastic, and
Mm-hmm.
how you know governments do certain things to you know get it over and under, you know, between 70 and 80 is the sweet spot and whatever. And but I'm gonna look and see if there's like a short on like the jewels that are dropped on it. But this guy is like fighting with the cartel,
Sure.
and he breaks down things like, dude, it's so cool and it
Yeah, I'll
makes so
check it
much
out.
sense. And watching it, I'm like, oh man, dude, if you just watch the first like 5 minutes of the first episode, the guy kidnapped with a hood over his head, and some, you know, some cartel is like whatever, tell him that he can't be on the land because he's pumping oil on it or whatever. And then he, you know, whatever, boldly fucking tells him how life is or whatever, and he breaks down, you know, how the government will be here and you don't understand the players and this is a $1 trillion business and whatever. He breaks it down all so efficiently. I'm sure there's some shorts on it that just break down like these killer economic views on it.
Mm-hmm.
But dude, I'm telling you, this thing's gonna hit, and
Hmm.
it's like yo, hand in hand with everything you speak, bro. It is so cool. It really is.
Dope.
Like
Yeah, I'll
I
check it
wasn't
out.
into it. I tried it a couple times. It's phenomenal, really phenomenal. The way the guy spits it. He's like listening to the radio about like you know whatever the oil industry and you know like a 1010 or whatever, and he's like arguing with the radio, and he's like, yeah, you raise this and, you know, all expenses go up. And then they talk about dropping. He's like, yeah, and now, you know, groceries are going to come down and this and that. And like, whatever. He's like front runs the radio. I know it's still on TV, but the stuff he spits will be right up your alley because it's, again, phenomenal and crazy insight on it.
Yeah, it'd be
Really,
cool, man. I'd
really
like to hear
good.
different perspectives for sure.
I'm telling you, listen to it. It is good. It's phenomenal. Phenomenal on that. He just drops jewels all through it. But yeah, there's a couple of key points where he just goes on a rant, and yeah, dude, unbelievable. And it's like senators and whatever. Again, it's a good watch. But yeah, I'm sure there's a short
That's how you
after.
know people are passionate about shit, bro. You don't rant a little bit. Like if you're not that passionate where you get in the middle of explaining something and you go like full rant, like I don't even want to hear it.
Mm-hmm. Yeah. It's crazy, man. It really is.
Dubs, I think we're already past that point, bro. That little circular economy they got going. If Nvidia can't hold, right? If Oracle can't what actually when's Oracle's earnings? If Oracle misses earnings, Oracle can't buy chips. If Oracle can't buy chips, Nvidia can't send out corporate bonds to support the semis. If the semis stop getting that money from the majors, then they can't buy anything else from Nvidia, and the whole circular shit goes to hell. When's earnings? On the 14th of September. Probably not going to wait around that long, I'll be honest with you. Yeah. It's been going on for way too long, Douglas. It's low key like a little, not to sound like high def, but a little Ponzi they got running over there. The first canary in the coal mine, like we did on the deep dive, was Samsung and Hynix in Korea. Because anything that was left over from supporting the semis was going over there. When that dried up, that was like the first clue that okay, they're ringing back, right? They're bringing back the capital, which means that they don't expect it to last much longer. Nice, Leon. Oh yeah. I'm in some drone plays right now. The Pentagon is we did a deep dive on it the other day. The Pentagon is spending a nice amount of change to automate our drone force. Yeah. Hold on, I'll show you. Where the hell is my watch list? So AVAV. They all took a nice hit on the peace talks, right? But people are mispricing these companies, right? Legacy is pricing these companies as hardware companies because they made drones. They have to be repriced as software companies, right? Because they're all bringing in AI. What this war proved is that we don't have drone defenses, and we can't keep spending $1 million, interceptor rockets to shoot out $50,000. That math don't math. So I think from what it sounds like and from where the money's flowing to, if you go to .gov, if you go to war.gov, the money's flowing into autonomous drone services, which is basically going to be like a drone net. Right? They just sit around, float around, look for enemy drones, take them out, sort of thing. AVAV Dro is another one that I'm looking at. Hold on. Let me fix this. No, that's not what I wanted to do. Um, right. Drone Shield Limited is DRO. Aerovironment is AVAV. Red Cat Holdings, RCAT, UMAC, Unusual Machines. That's basically the stack that I'm looking at right now. Keeping my eye open for new, but just yeah. We look at some of the weeklies. These have taken nice dips. The ones I was really looking forward to was AVAV and Joe because they were on good retracements. And like I said, I really feel like these companies are being undervalued right now. They're being mispriced. Right? Hardware companies have a limit. Like hardware companies have a ceiling. How many drones can I sell? Right? Software companies don't have the same restrictions. If you want to stay up on these sort of things, just go to war.gov, which used to be the Defense Department, but now is the Department of War. Right? Contracts. Here, I'll give you some free alpha. It's usually reserved to Cypher School students. Every single day, the government comes out and tells you who got contracts and for what. All it takes is some research. Right? Every single day, you can come on here, click, and read. Torch Technologies. Are you a publicly traded company? That's the first thing you need to figure out. Not all of these are publicly traded companies. If it's a publicly traded company, how much were they awarded? Over how much time? And is that priced into the, has that been priced in to the value of the company? Right? Every day, free info never stops. By law, they have to tell us what they're doing. It's just nobody looks. Right? And what I noticed through looking at this is just an overabundance of drone tracks going out. Right? Listen to a couple boring ass Pentagon speeches and used a little bit of common sense. This war exposed our weakness. I mean, there's no other way to look at that, right? We're weak against drones. We can't stop a bunch of guys in caves with $50,000 drones. We can't right now. We can't do it at this moment in time. Right? That needs to change because what that does is that just sends a signal to all our enemies that, hey, they're weak against drones.
Dude, Ukraine was a gift, unfortunately.
Necessity, bro. Necessity is the mother of invention. They were up against frickin' Goliath, you know, and some of the tech that's come out of there would have never happened without that. Or at least not now, you know, eventually maybe. Bro, they sent submersible drones to take out mines and shit. They're like, oh, you guys got a mine problem you can't figure out? Check these things out. We got you. Russia's been mining our ports for 3 years.
Dude, they almost completely eliminated their Black Sea Navy with water drones. It's crazy.
You know, it could just be kinetic. Delta, they could just run them into them. But the point is that you're only spending a fraction of what you're spending. Right now, we're doing it kinetically, bro. Right now, we're literally trying to hit it with surface to air interceptors. It's the math. There's a clip And if anybody can find this clip, that would be great. I should probably put AI on it. There was a clip after 9/11. It was it was during the season where during the season. It was during the season where bin Laden was um where he was dropping videos from inside the cave, you know, full outfit, cave background. It was during that season. He laid out the plan, like what his plan was, right? Because they asked him, "How do you plan on taking down the United States? Like, they're so powerful." And he said that you don't beat the United States, you bleed them dry. Right? What you do is you bleed them dry financially until they lose the will to fight. That's the only way to beat the United States. He said for every dollar Al Qaeda spends to fight the United States will spend 1,000. And that's the same thing that's happening in Iran. For every $50,000 drone that they send out to hit something, we're spending millions of dollars in interceptor missiles to take it out. They can build these things faster than we can take them out. And we can't get them out of the caves without putting 1 million people on the ground. Right? You don't beat them, you bleed them dry until the cost of war becomes so much that the American citizen turns against it and brings them back home.
I was gonna ask you, so yeah, I heard you speak on semiconductors. I was wondering what your thoughts were about like the R&D side of semiconductors, like their picks and shovels, if you will.
I mean, you could go rare earths, right? That's what most people do, go silicone. Um, it just gets really political. I mean, it's just the whole Taiwan issue, right? And that's what most of this shit is going to boil down to. I don't know if you guys are aware of the Monroe Doctrine, but that's too much to get into. You could just Google it real quick. But that's basically what the plan is, in my opinion. And it's already been stated by the defense secretary. Like, we plan on controlling the Western Hemisphere, right? To control the Western Hemisphere, we're going to have to give up the East, right? China's going to control the East. We're going to control the West. The problem is that most of our rare earths that we need are in the East. What's the first thing that Trump did when he came into office? He locked down as many rare earth deals as he could for tariff during the tariff negotiations. Why? Because they knew we were about to circle the wagons around the West. But you can't do that if you can't lock down the rare earth minerals that we need to become, you know, what do they say, the manufacturing capital of the world? Well, that takes materials. So a lot of this shit is geopolitical. And that's the problem with semis. If you want to get to the picks and shovels, you sort of get into that sort of material, you know, into that realm, like trading oil.
Yeah, I can't remember the name of the company I was looking at, but it's a like they develop they develop laser cutters for semiconductor machines, right? Like the machines that produce semiconductors. So I was thinking that has more potential because even if it gets split up, they're still going to be developing for both sides, I would imagine. But then again, you're right because it could be that. I guess that all depends on who that contractor is to here.
Yeah, it depends on what companies lock down what deals for what precious. I mean, for what rare earth minerals. That's why Greenland was such a big deal. Because what's Greenland? Is that east or west?
You know, so messed up about Greenland, man. Is they were the whole we have military bases there. We already have a footing that's pretty solid. I don't even know why he had to play those games. I mean, I know why because he is who he is, but like, dude, we already have a strong footing there without all of the freaking drama, and it's just so nuts. It's
Let's
just
look at a
funny.
map real quick.
Little Marco came to save him on that one.
Right? So right now we're over here fighting over this strait. Right? The reason we're fighting over that strait is because the world's energy and fertilizer, so food and energy, the two things we want to ignore right now when it comes to our economic data. But the two things that run the world run through this strait. Right? Control of the strait controls that. We've already lost that. I think, in my opinion, we've already given up that idea. Right? The reason that I say that is because, like I was talking about the Monroe Doctrine, right? We've already moved into securing that oil from Venezuela, and we will continue to move into South America and do the same thing, South and Central America. The Monroe Doctrine says is that everything to the left of this line belongs to the West. Right? Everything to the right of this line belongs to the East. And that's what I think we're going through. But to do that, to take control of a whole side, you've got to take control of the trade. Right? So there was a time, in my opinion, where I think that we planned to take control of a lot more than that. I think the original plan was to take control of everything on the left side of it. You see the Russian line, Kazakhstan, India, China, all of that gets segregated. Right. And I believe that our plan to do that was to first lock down the strait, but we failed to do it. The next plan, the next part of that plan would have been to lock down the next viable strait, which would have been the Strait of Malacca. If you lock down the Strait of Hormuz and you lock down the Strait of Malacca, then you've essentially cut off the entire East on their own. And we keep Europe and we keep Africa. Problem is, we've already lost Africa to China. And we can't control the strait. And if you can't control the Strait of Hormuz, then you can't control the Strait of Malacca. So what do? We push the line back. Right? Now you only need to control the Cape, Suez Canal, which we already control, Red Sea, right? So all of the movement coming out through here. But what else is necessary? You got to lock down the Northern Passage, right? Because that's where China and Russia would have to come through. And for that, you need Greenland. And that's why I think they made such a big deal. Because without Greenland, you can't do it.
I think that's why when you say they made a big deal, like not they, him.
Yeah. The administration. Yeah. I believe that he thinks the president of the United States should be the president of the Americas. This is America. It's all America. I don't care if it's Central, South, North. I'm the president.
So it just reminds me of the kid in the like sandbox who's like, all toys are mine.
It's just a different way. I mean, it's necessary because if we're going into a multipolar economy, right? If we're bifurcating this, what was a monopolar economy with just one reserve currency, then you have to give China the East. But you can't give China the East without securing the West, right? By securing the West, you're basically giving them the East because you're circling your wagons around the Western Hemisphere, which leaves everything else sort of wide open. And we're talking economically here. We're not, you know what I mean? We're not talking, this is trade, the trade war that we're talking about.
Yep.
This hot war in the Hormuz is just, that's like a small thing compared to the bigger play here.
The advantage we have, man, is they don't have a Japan on our side. Like, you know what I'm saying? There's no military power on our side that is close to them. So even from a geopolitical perspective, they're still kind of surrounded. And they, you know, with what Japan just did with the yen, you know, a few weeks ago is like plays into that picture. But it's just like I don't know, man. Maybe that's why they're building all the islands and stuff.
They
But
don't.
Well, Japan instantly made a deal with the Philippines, like just literally recently, like a bilateral deal that if either one of them gets either attacked by China or their trade routes cut off by China, that they would basically try to jump China. It's not a great idea. I like Japan's odds for doing some damage, but I don't like the odds for the sustainability of a long, drawn out conflict. Let's just say, let's just put it like
yeah,
that.
I mean,
But again, if we go back and we look at the map, dun, dun. So if we go back and look at the map, the reason that they're freaking out, that the Japanese are worried, is because that same strait, right? That same, oh, hold on. That same Strait of Malacca, right? That China uses to get, well, that uses to get their energy and their fertilizer out of Hormuz into China and Russia, is the same one that Japan uses, right? And right now, the inner ring, the inner islands, right, are basically controlled by China. All of this will basically be controlled by China if they're given the East, which means they decide whether Japan can use the Strait of Malacca or not. And I don't know if you can tell by this, but it's a long way around Australia. It's a long way around. Sure.
I mean, they have no claim to any of that any more or less than we have claim to Venezuela or Cuba. Like
Yeah.
it's the same scenario to me. It's like we can't criticize them if we're like you said, it's all of the Americas or nothing, you know.
No, you
But we're
take you
both. I
take what
mean,
you can hold, basically, you know.
yeah, but it's still wrong for both countries to be doing it. I mean, I don't know unless we can over a period of time show that Venezuela is a better off under our
By whose
protection or
standards?
under our yeah, but again it's like if you were to say that like I'm not saying Iraq is the shiny beacon in the Middle East, but Iraq's actually doing pretty freaking good, and I was against the Iraq war, so I got to eat crow, man. It's like, you know, like you don't hear much about Iraq at all in the news anymore.
Yeah.
I did want to say earlier too, like China doesn't have a country in the West, but it does have some soft power through its access through the cartels and stuff like that.
Well, debt
Because there
mostly,
are still,
right? Like the money that's owed and how much debt it holds, but military debt now. The military would crush the cartels in a second if it ever came down to it.
yeah.
Colombian military and the Mexican military might have issues, but their issues, I think, are more desire than anything else, right? They just don't want to. They've got deals. Everybody's getting paid. But yeah, that's not a. This is more monetary, and there's been shots across the bow back and forth. Venezuela was China's number 2 supplier. Number 1 supplier was Russia. We already cut them off. Sorry, number 1 supplier was Russia. Number 2 supplier was the Strait. Number 3 supplier was Venezuela. So we sanctioned Russia, cut off their oil, then we clog up the Strait, but we don't clog up the Strait until we shut down Venezuela. So now China's sitting there like, oh, yeah, I think you're cute. Like, you don't think I see what you're doing? That's why they came out
Yeah,
and
how much?
they made that statement. They said anybody that impedes travel to Chinese tankers, it'll be considered an act of war.
Now, how much influence do you think that they have through their investments in Africa, right? And like the resources they've gotten hold of, stuff like that. And
Influence
what's
with
like
who though?
well, I should say like not necessarily direct threat to the West, but like more or less mitigating the West's influence or the West's reach.
China just wants
If that's
access. China just wants access to the world. China knows if it gets full access, it'll take control. It doesn't need to stop the U.S. from doing anything. I mean, we gave them Africa, the entire continent, by not paying attention to it, and it's not brand new, right? It's just that's what the world reserve currency country does at the peak. They get comfortable. They feel like nobody's close. They stop investing in the rest of the world, and then number two sort of steps in, right? Where we leave that vacuum. So it sounds like I'm criticizing because of the whole Monroe Doctrine thing, but that's exactly what China's been trying to do, right? Is carve the East out slowly, and Africa's a big part of that. So their influence comes in what they provide for these countries, right? They come in and they provide infrastructure, hospitals, jobs, highways, water plants, everything that a country needs to run. And then it's like, okay, well, you can kick us out, but we're taking everything with us, right? You become invaluable. And at that point, yeah, the influence has got to be great. Not only that, but you can prove that you can provide something that before was only like the US, right? Like the US has to come save us. Maybe they'll come do this or that, blah, blah, blah. Well, now there's an option. A lot of it is hearts and minds, man. Trying to win hearts and minds. All right, I gotta go get some food, y'all, because I'm starving. Be back in a bit.
Hey, Jacket, have you been following like some of the uh more recent developments in like quantum and stuff?
Uh, at the company I work at, yeah. I mean, we're doing stuff that it's not, I mean, I'm not part of the project, but I'm part of the documentation, I guess, for it. So I don't know if you saw MS's chip, but
Yeah, that's why I brought it up, because I just saw that they like, so they changed the substrate to, or I don't know if it's a substrate is the right word, but from like, what was it, tin to lead or something like that. They're able to get um longer lifespans for the qubits or something like that. It was like something. It was. I mean, it was a allegedly like a very rapid increase from what I saw. I'm
yeah,
still
dude,
around it.
it
Go ahead, sir.
it's not it's not a coincidence that the speed is increasing once AI came into the picture. The combo is where it's gonna start getting nuts.
Hmm. I mean, how hard is it? Like, is it a what? How much does it increase the degree of difficulty? I guess is what I'm trying to ask, to integrate AI into quantum compute, or is that sort of like
Well,
being solved?
I meant about from the development side. So all of the all of the hurdles they have with scale, because their biggest problem is scale right now. They literally have models churning 24/7 how to solve the scale problem. And keep in mind, these are guided by people that have been working on quantum for 3 decades.
Right.
And
These
so,
are specialized models.
yeah, yeah.
Understood.
And so it doesn't mean that they'll come up with a better answer. They'll just come up with whatever answer that we'd have gotten 5 years from now. It'll come in a couple of months.
Mm,
And then
that's
what it
interesting.
and yeah, and then what it means when AI is integrated, it's not really an integrated thing. The same models will just run faster.
Mm,
I mean, look what we've done without quantum. We've taken a company like 11 Labs that manages to take your voice and clones it, and then creates an entire script for, like, let's say you're a content creator or you're just doing a presentation, and they've managed to do that in minutes, and that's on a GPU. And recently, open source has managed to take 10 seconds of your voice and process this a large script on the CPU. So so that's twofold. It's really weird. It's like, I don't know, inception's probably not the word, but so you have AI helping build quantum to be more efficient, so it could be um, deployed in a desktop scenario. Then that desktop will now run the AI that it used to create itself or to help improve development to run normal everyday tasks or maybe more development tasks even quicker. Then it also finds ways to run the models purely on quantum, so you're saving energy, and you're not, this whole GPU problem is also eliminated. So then you have people that are going to want to use quantum in GPUs. So then you're going to super accelerate quantum by stacking it, and then GPUs will still be expensive, but they'll be able to do like a million X more operation. It's just crazy, man. It's never ending.
yeah, I guess the rate at which you can optimize and refine the process, right, or the integration is that.
Yeah.
So the thing that like kind of made me understand how effective these like specialist AIs are is the the companies that are using like specialized AI to develop new types of like jet engines, like the fuelless or yeah, the fuelless jet engines and stuff. Well, they use a fuel, but it's not a like a traditional fuel. It's like I think they use like hydrogen at like super. I can't remember if it's super high temperatures or what it is, but they like these crazy new jet engines that they've developed. They're not like fully stable yet, but like the advances in that technology are insane. Not necessarily in a realistic state of use yet, but
Yeah, it always starts out that way though, right? It always starts off with just very nuanced, specific people in certain scenarios using something. And then the next thing you know, it's in your kitchen.
yeah. Have you been following at all like the so I know I haven't followed so much like what they're trying to do. They're this collaboration of the independent like developers and stuff for AI models that are because you know like the the people that attack like Hugging Face and all these different, I mean, is that saying right? But all these, yeah, all these different AI and like that attack GitHub and whatever. I know that they're like they announced like they're trying to create a collaborative effort through all these different independent developers to counter these attacks. But I didn't realize uh how prevalent and prolific those attacks have gotten. You know what I'm talking about?
Yeah, yeah. I mean, the funny thing is that everybody back in COVID when we were talking, some of the first new AI models were coming. They were already anticipating this, and there's going to be more attacks. But is it going to be as damaging? It's not going to be as damaging as people think because there's already defenses in place. And yes, we're going to get disruptions. And yes, Cloudflare is going to get knocked out for a day. And yes, banks are going to get screwed up for a day. But it's not going to be total chaos like everybody thinks it is because defenses, they've already been working. Dude, the banking industry is not going to let them get taken over by constant phishing and, you know, um, denial of service attacks or whatever. Yes, they're going to keep doing it, and yes, we're going to have disruptions, but you can use AI in both directions, and I think that's what people forget. They just think, oh, we're going to get hacked to hell, and it's like there's people that don't sleep on defense of this stuff. They get paid good money to build defenses for this stuff, and I just don't like. For me, I'm personally not as worried about it, especially if the what is it, FDIC, like you're insured up to a certain amount, so it's like I don't know, man. I'm just not worried about it.
When it did sound like, right, where it sounded like that these vulnerabilities were more or less exposed because this was like at the kind of the early age of this, and like security hadn't been fully, like, hashed out in terms of at an infrastructure level. And it is like it was a pretty simple vulnerability, I think, that they found. But it's at the like this was kind of like the early days of pooling AI um as like a threat agent. You know what I mean?
Yeah, I mean, there's gonna be. It's kind of like in trading, man. It's whoever's got the most money can move the asset, and I kind of feel like the same way. Whoever's got the most compute is gonna be able to do the most damage. You can have the smartest AI dude in the world, and if it's swarmed by 10 other lesser intelligent AIs, it has no chance.
Well, it's also like you if you attack swiftly enough, you can break through a whole swath. But like that will get covered, and then eventually I think the rate of defense will increase to a point too, because it becomes a necessity, right? Like that can
Yeah.
only go on for so long.
And then there's the other side of it too, man. If it gets too out of hand to where it can't be defended against, what do you think the next step would be? Think about it if you're like someone like Elon and you have as much resources and SpaceX gets hacked. What do you think he's going to do?
I mean, you either build big good defenses or you attack back.
And I don't, with his connections to Department of Defense and
Yeah.
contractors, if it starts getting around the world that you can be found wherever you're at and you do something like that, you're going to go from, you're not going to get your service. He's not going to attack back with, he's not going to do a digital attack. Let's put it that way. It's going to be kinetic.
Yeah. Yeah. Well, and I would say it'd be a combined force, right? So like kinetic with digital, you overwhelm the opponent
I know.
from
I
every.
guess my point I'm
Yeah,
saying
but
is
yeah,
that
yeah, yeah.
you'll think twice when you're like, okay, well, I'll just get my servers knocked out or whatever. But no, they'll be like busting down your door and like dragging your body out. That's what they'll be doing.
Yeah, and the other, like, so the other thing that that I forget that I think it is important, right, is that the reason they were so successful at these attacks was because a lot of these things were kind of rushed out to the front, and a lot of them were also borrowing from each other, right? Because this was very like early stages, independent developers, and because of that, the one vulnerability in the one created a ton of vulnerabilities in the others. But I think that like that also is going to force a little bit of evolution in these, in these developers to more focus on different means to prevent, like preventative means, right? Preventative measures. Um, and so it takes a little bit of time to adapt, but that creative force also is going to be diverse and diverse, competitive, um, and collaborative too, right? Like once it becomes collaborative, it's also like you're now facing not just taking down one or taking down finding the vulnerability that's at the root. Now you've got to deal with all these groups that are going to work together and share information on how to secure these things, right? That and I think that I think that because it was early and these vulnerabilities were easier to uncover, and this was kind of like a new age of attack, right? It seems like the funding that whatever this group like Laughing Bear, whatever, I can't remember which ones, but like they have unlimited funding, but also if they are connected to certain entities that are currently expenditure, like have high expenditure amounts and not necessarily the healthiest economies right now, like that funding will quickly, you know the rate of funding will quickly change, right? So like that also changes the dynamic completely.
Yeah, it's gonna be fun to watch. I'm excited either way. I don't, I mean, it's nothing I can do about whatever happens, so I might as well sit back and take, make some popcorn, drink a beer.
Yeah, for sure. No, it's a huge, like that's the thing. Like it's very intriguing, right? And this is a lot of this stuff is the stuff we talked about 10, 5, 10, 15 years ago. Um, right. And like, or at least I don't know if on a majority scale we did, but there were absolutely entities that had predicted this. There are absolutely people that had foreseen these circumstances existing, right? So it is gonna be very interesting to see the response or to find out about the response later.
It was a weak ass type 2 entry.
What's going on, family? Let's get back to the office. And we're still sitting right here. Right. Cool, cool, cool. Slow trade, but I'll take it, I guess. What's good, Joe?
Mm. Bruh.
On a day, huh? And we're still running the same sort of measured move up. We got the break, but we haven't really pushed, and slow breaking W's become bear flags. So we got to be careful here. But so far, the original trade still stands. Nothing crazy. Want to try to avoid giving any more strength to this idea. Because we don't like that. I do want to look at Ethereum because Ethereum looks interesting. It depends on how you want to look at it, but I think log is way cleaner. Let me see. Does anything pop up for me? Is this thing still being stupid? 63.5. If your bearish here is what you want to break so that your short can start printing. A little bit lower would be your type 2 for a fractal if it was going to fractal out. So just because you invalidate this W doesn't mean that you're not putting in larger one. That's why I'm not moving my stops or anything. Have family come in from out of town unannounced. That's always fun. Nope. 3 days down. Like the 2.5 day. Remember, it was a false move up this weekend. $62.5 is the big one in my opinion. 62.5 doesn't hold. Things get significantly more bearish. There is. It's not good. Yeah, I want to see something sexy for the next bull market. It's 2023. Somebody even argued that it's already broken and riding the tops. But either way, when this thing finally goes, and the reason I say it's the effect that it has on the bull market, right? It has on the alts. My opinion, we're probably somewhere around here doing this. Came down, popped up, and then we start to look for that sort of move, which is something we haven't seen since 2019, really. That is what Ethereum looks like when it goes parabolic against Bitcoin. That's what gave us all of our alt seasons from 2018 all the way up to 2022. And this was Bitcoin taking its dominance back. Right? But the funny thing about Bitcoin and alts that hold their market value like Ethereum is that it seems like they work like an oscillator. Right? They work like an RSI. Right? So what happens when she gets to the bottom? Well, we already seen a little taste of that, but just to give you an idea of what happened the last time this happened, if you go look at others, which is basically every alt, except for the tops. The problem with this bull market, and if you look at this is exactly, if you were here for this entire bull market, this is exactly how the altcoin season went. Meaning, if you were here early when Bitcoin hit 15.5 and you were playing around with brand new alts, you got big run-ups. Right? This is when Jasmine over 10x, and this is when all these coins were like 10xing off the lows because they all got beat up so bad, right? But then look at what happened. Right? They gave it back, and then if you got in late, you gave it all back. So it wasn't like this where in 2020, right, you bought your alts, they went up, they went down a little, but they held their ground. And then when they went up more, they went down a little, but they held their ground. And they went up, and then they held, nothing held its ground here. It's all the way up, all the way down, all the way up, all the way down, which is cool for scalpers, right? It was a scalper's paradise. But if you didn't TP at those 3 points, you gave it all back. So, in other words, my point is, if we do get a situation where ETH starts to reclaim some dominance, that's when altcoins can hold the ground that they make. Right? If ETH is bleeding against dominance, then altcoins give back their gains when Bitcoin starts to move again. So you can play the rotation, right? But when it's time for Bitcoin to start moving again, it's time to get out of alts because it just sucks all the dominance straight out of it. Yeah, that's for later, right? I'm not saying that ETH BTC looks like it's going to do that now. I'm saying it looks like we're basically as low as we can, as low as we've been expecting to get this whole time. And it's not just ETH BTC, right? Look at, let me get rid of that. Oh, you know what? Let me just do it like this. I haven't looked at these for a while. Mm, watch list. When was it at? So this is total two minus USDT divided by Bitcoin. Right? Because we have to take the stables out. And the only way to truly judge it now is without the stables. Because total stables are increasing. Those stables are not coming in to buy crypto, so it doesn't mean anything when we compare them to Bitcoin. So you got to start removing them. But you can see what I mean here. It's like we're range bound, basically. But again, we are getting close to the lows with that. Actually, hold on. There's something here. Let me go to. It's not here. Oh, yeah, either. I'll market maker. It is. Why is this wrong? Like, it's like off though. Another one like this? Yeah. Well, that played out. This was something that was done for long term holders. Don't pay attention to the trade for part. I was covering something specific. But typically what it is at these bottoms, excuse me, are when alts are at their lowest against Bitcoin value, right? But if you turn on indicator, you can see that it doesn't happen right when Bitcoin bottoms. Or it typically doesn't. Let me explain. Which probably means that it's a good idea to get into alts a little bit earlier than we're used to. Where is, let me put Bitcoin on here. So everybody that just, thinks you automatically, Bitcoin gets to the bottom and you automatically buy alts. This is where Bitcoin bottomed. Right here is where Bitcoin bottomed. You see what happened to the Bitcoin value of all of total 2? This doesn't mean that the alts went down in price. It means that they went down in Bitcoin value, right? Which means Bitcoin took off first and it took dominance. Which means that even if you just sold your Bitcoin here and then bought alts, you would have got way more multiple, right, of the coin that you're trying to get. So it's all about buying at the right time. What's interesting about this year is that we're super close to the bottoms already. Usually we're not, right? Let's see how far we are here time-wise. And this is the reason is because we never had an alt season. So this didn't drop from up here like it did here and like it did here. It's dropping from here. So the question is going to be, where is total 2 divided by Bitcoin and where's total 3 divided by Bitcoin when Bitcoin hits its bottoms? Right? And will we lose these lows? Then if you want to pay more attention to like your souls and your top 10s, you would look at your total 3, right? That removes Ethereum from the equation. Right? Same sort of deal. When Bitcoin was at its lows, we were up here. Yeah. Yeah, DB. Yep. And then others removes all the high caps. Top 10 and right? So yeah, they've been, I mean, if you look, we've really just been ranging against Bitcoin value. Look at what happened on 1010. Yeah, alts went down to almost nothing against Bitcoin. Then we can look at others minus USDT divided by Bitcoin. What do you mean? Oh, you know what? I can just do it like this. Just do it like this. Dun, dun, dun. Difference here is that we haven't, and others BTC minus USDT. That's not a good look. But that just shows you what the long game is holding alts versus Bitcoin. Let's go, baby. Hit that target before bedtime.